Good morning, good afternoon, and good evening. I'm Keesa, and welcome to the Refinitiv Perspectives live stream. As always, we encourage you to follow Refinitiv and subscribe to the Perspectives blog newsletter. Data means different things to different people. And in context of 2020, data has been pivotal in informing decisions within the financial industry. The COVID-19 pandemic and events off the back of the pandemic show the tremendous emphasis on quality of data over quantity of data. We're also exploring and discovering more innovative ways to source higher quality data. And today we're talking about a recent report produced by Refinitiv with Wired magazine. It's called The Value of Data in the Age of Uncertainty. Now, it delves into the explosion of data and how the industry is navigating through the noise to identify opportunities. We have a full lineup of guests today, but joining us first, Anthony Luciani, Quantitative Researcher at MarketPsych, and Amanda West, Global Head of Innovation Enablement Strategy at Refinitiv. Amanda, Anthony, thank you so much for joining us. Now, Amanda, data is being described as the new oil. That's an interesting statement, and we're curious as to how much truth is in that statement and why.
Thanks, Keesa. Thanks for having me. So I actually think that's a really valid statement. It's one that was made a while back by The Economist, I believe. And I think it's even more valid today than it was when they made it a couple of years back. For a couple of reasons. Most businesses today appreciate much better that if they employ data in order to run their business generally, then they're going to get much greater, business outcomes. And so I would suggest that regardless of which industry you're in, most people are trying to use and employ data much, much more directly in order to run their business. But the second thing I would be tempted to suggest, and this might sound a little self-serving, seeing as I work for Refinitiv and we're a data company, is that I really believe that what is happening in our industry in particular is people are seeing data as something that gives them a genuine competitive edge. And with the advent of machine learning really becoming something that's much, much more prevalent in financial services, the hunger and thirst for access to different data sets to use them to inform how you run and drive your business is greater than we've ever seen. And so whereas a couple of years ago, people were beginning to experiment with machine learning in financial services and think about how they can employ it. And really at that point in time, we're also very focused on building the teams that would help them and sort of consume the data. Today, it's much, much more about how well they're employing it to drive their algorithms, to understand how to, really improve the quality of the services in the mid and back office, to do risk assessment. There are so many different use cases, but they're all dependent on data.
And that's a great point. Speaking of use cases, I know that sentiment data is being used in a lot of capacities. Anthony, in what ways are you seeing sentiment data specifically being used, and how does the usage influence decision making?
Thanks. Yeah, just adding on to Amanda's point, I think what Elon Musk said, something like financial markets are just a series of heterogeneous databases, and what we're really doing with this exposure to more and more data sets is homogenizing these our databases together and slowly creating increased efficiency, and eventually we'll be able to move beyond finance. But for now, we have these interesting technical problems for us to fight with. So sentiment data, sentiment data facilitates the systematization of behavioral finance, because behavioral finance is the belief that people are non-rational with the way they make decisions, and they're not always maximizing returns and minimizing risk. And one of the first books on Financial Markets, Confusion de la Confusiones, written by Josep de la Vega, emphasized the importance of trend following, because it's just emphasizing the use of following the prevailing sentiment and opinion of investors and the masses. More anecdotally, we have people like Warren Buffett saying, "Be fearful when others are greedy, and greedy when others are fearful." There's a lot of a behavioral finance aspect behind that data set, behind that quote there. But it's very useful to consider that this framework that we see it from is a lot more overarching than people initially realize. And throughout,
so is that?
And yeah, go ahead.
Is that bringing in social media sentiment when you talk about investors wholly and really following trends? I'm thinking social media sentiment may play a role there. Is that the case?
Yes. So news and social media sources have their own independent impact on asset returns, and it's key to understand the different capacity that each has. But social media has its own complexity that is unlike news media. It's unformatted. The medium is constantly expanding and changing. You had those traditional like BB style stock messaging forums in the early 2000s. Now you have YouTube comments, Reddit, Wall Street Bets, Twitter, and different nuances with each of these platforms that also might hold value themselves. If you think of like the likes on a Facebook post, or Reddit sharing, or Twitter reposting, or even just similar things with the number of posts on a YouTube video or comments, all of these have potentially an impact on an asset's return. And with the increase, we have thousands of social media websites. It would be impossible for us to try and determine each individual feature's impact from that website, because we have an endless set of features to extract value from. Some people have tried it. Some people have tried, I think the bestseller code book had a massive corpus of manuscripts, tried to tackle that dimensionality problem by constructing, just came up with some very useful features for what would actually be a bestseller manuscript before it's even written, according to those that are best-selling in the past. But it's a complex problem finding value in social media data. But we found enough to start with. I believe that paper by Bolin et al. In 2011 called "Twitter Mood Predicts the Stock Market" showed ridiculous predictive power of Twitter posts. Not all Twitter posts, but a select few that are dedicated to specific topics. In that paper, they had something like 86% predictive capacity of Dow Jones Industrial Average. But of course, wow. Take everything with a pinch of salt that you see in an academic paper, but it's still, there must be some validity there.
You raise a really good point there about all the data. Yeah, Amanda, go ahead. I'd love to, Amanda, for you to drill into
I was just going to say,
the
one thing I would add to what Anthony's saying is the other massive trend that we've seen very recently, sort of in 2020, is the rise of natural language processing. So as he's rightly pointing out, there is a massive corpus of really quite unstructured data that's very relevant in financial markets, but it's sort of all sorts of social sources or news, or indeed like broker research, anything textual that generally is really difficult to consume in a way that's sufficiently structured to drive decision making. There's such a big shift happening in this report that we did recently. 75% of the people who we interviewed said that they were employing sort of NLP, and in particular sort of deep learning techniques in their businesses. That's a really big shift, and very substantial in terms of people across the board in financial services being able to derive deeper, greater, more real-time insights from unstructured data sources.
Got it.
I think that's
and also,
partially.
I mean, talking.
Yeah, I have a lag, but yeah, I was going to say
the 2020 pandemic as well, and talk about just the importance of this type of data being digested as it relates to the pandemic. I'd love to get your thoughts on that.
Well, I guess in 2020, we've seen a couple of things that deviate from the norm. We've seen not just Corona, but price momentum as a factor has stopped performing as consistently as it used to. We've seen, well, across a larger period of time, traditional fundamental analysis no longer holds the same value as it previously did on companies. We're seeing this divergence of expected stock price value compared to its actual price value. And this abnormal component that people are trying to explain, they're now trying to explain through things like unstructured data and NLP and actually financial news and financial events that are occurring. And coronavirus has obviously been a major impact, but all of these can overarchingly be described as a period of uncertainty. Not that financial markets aren't already inherently uncertain, but with this peakedness of uncertainty, it's really changing investor behavior. And it's making, when people are uncertain, it's making them more sensitive to new events and more susceptible to herd mentality. And in behavioral finance, that's an important concept to try and quantify as well, because sentiment data may seem like it's a novel alternative data set.
Too. I mean, what are your thoughts about that, Anthony? I'm just getting in there with some really good, with this really good point. With ESG, when you talk about the sensitivity, when you talk about 2020 and the differences we're seeing now, do you see that the likes of data around ESG metrics, a lot of investment dollars being poured into ESG products and projects? Does machine learning help to ensure a high quality of ESG data sets, or some of these components that we're talking about helping to ensure that higher quality of ESG data that so many businesses and leaders are looking for?
I think ESG is such a novel data space that people haven't really employed machine learning to that extent yet. I mean, people are using machine learning to perhaps find useful features, but at this point, it does seem like a data mining exercise, trying to find out which feature is the most useful in determining a particular stocks or determining investor preferences. You know, you could have a feature about the number of oil liters consumed by a company or the level of social unrest internally within a company, but it's very hard to tell which exactly, from a machine learning perspective, would be useful for someone to incorporate into their own models.
Can I add to that?
And Amanda, your thoughts on that?
Yeah, no. So I think Anthony's he's right. A lot of the work that we've done within the labs over the last few months around the world of ESG. So we've looked at the climate risk as an example. Often the conclusion we've reached is that until there are certain data standards developed and adopted, which needs to be done across markets or geographies or sectors, then it's often quite difficult to be able to apply machine learning very readily. And so a lot of the areas that we're now focused on is almost slightly further up the curve in terms of what does it take to derive and create those standards. Now, having said that, the pandemic has also really made people very, very data hungry. And so what used to be called alternative data sets, like say satellite data, geospatial data, mobile phone type data sets, are now things that many of our customers are really trying to understand how they can use those to inform their strategies, because many of these data sets can give you what have been previously hidden insights into what's driving certain market shifts and changes. So we've seen a much greater hunger for data via the pandemic, but equally, the other challenge in a way in financial services has been how much has the pandemic impacted existing models, and how much have people had to take a step back and come back and revisit what some of the key assumptions and drivers were into those models. And any outlier is going to impact them. And there have been a lot of outliers this year. Yeah.
And what an interesting question. That's one of those things that we are, I guess, going to have to circle back to next year this time to talk about how the pandemic impacted those existing models. So much to discuss there. Anthony, Luciani, thank you so much for joining us. Amanda, we're going to keep you around for a minute to join us with our new panel. Thank you, Anthony. Joining us now is co-author of the AI Republic, Mark Esposito, and also editor-in-chief of Wired magazine. Greg Williams. Mark and Greg, thank you for being here. And Mark, in Davos at the World Economic Forum at the beginning of this year, you highlighted that technology is a strategic asset. Now, how has data become a strategic asset today, or do you even think that's the case?
So, because I would say probably the same now about data, right? Data becoming a strategic asset, and I think organizations that don't have a data strategy these days don't have a strategy whatsoever, either because they're going to be surrendering to someone else defining the strategy, or because they simply have not yet defined the value that data has in their organization. But I would say if before technology was defined in an organization, and we could argue that every company today is a technology company, no matter whether they know it or not, data, I think, equally has a very similar touch on having becoming an asset. And like every asset, it generates both the equity about it, but equally the liability, which is problematic at the same time. But I think there's a
So what do you mean by that? Every company is a tech company.
Say again,
Give
sorry,
us a little
Keesa?
deeper explanation. Every company is a tech company. Give us a deeper explanation. What do you mean by that?
You know, even if you're not into the technology field, you are dependent on technology for anything you do, from open innovation to a storage on the cloud to any form of a program you're using. Today, the dependence on technology companies who are producing technology products, it's actually quite difficult to decouple from any businesses. Even organizations that are in the brick and mortar world, let's say a retailer, they still need platform to be able to access the market. And I think the pandemic has shown to us that the strategy on e-commerce for some retailer was the difference between remaining in business or being out. For example, Walmart was able to transform its entire business model towards online retailing. Other companies were not able to do the same. So in this case, technology really is a discriminator towards either success or, to some extent, lack of success in these times.
Keesa, I was just going to add something to what Mark was saying, because I think another area where you could look at, if you know, the rise of the data scientist, and everyone's been talking about how important the whole sort of data science sphere is. Really, the reason those people and teams are so critical and fundamental is because they have this really interesting blend of skills, which is a mix of tech, data, and then whichever sector or business they operate in, understanding that sort of sector or business. And though it's sort of that the blend of those three things that makes them so hot and in demand across all businesses. That's not peculiar to financial services, but it's sort of their ability to understand tech is really fundamental to them being able to access new value.
So if we look at taking that value point and expanding it, if we look at the value that data brings and the value that it brings in terms of changing the way that machine learning and AI, artificial intelligence, has been adopted by the financial services industry, have you seen the pandemic impacting that trend of adoption? Amanda, I'll just let you pick up from there, and then Mark, you can chime in as well.
The adoption of the use of data?
The adoption of the use of machine learning and artificial intelligence specifically.
Sorry. Yes, very definitely. Again, with the annual survey that we do, sort of tail end 2018 to sort of now, the adoption rates are really quite startlingly different. The numbers that we've seen in the survey, but not only just adoption rates. I think also the complexity of the type of work that people are trying to undertake from a machine learning perspective has changed quite significantly. You know, so this sort of shift towards deep learning is something we were not really expecting to be quite as prevalent in the survey. But to some extent, it's unsurprising in the sense that if they've hired the right teams, and if, as Mark's saying, you've got to be a tech company, that the next thing that they're going to be doing is really sort of trying to drive towards employing machine learning to look for competitive advantage across the piece.
And Mark, we definitely get your feedback there as well.
Besides my work in the academic world, I co-founded an AI company called Nexus FrontierTech. And we are somehow one of those companies that goes from a proof of concept all the way down to the integration in the client's environment. And we have never had so much demand for what we do. And I guess I was trying to ask myself the question, why? And I guess it's the resistance to the idea of AI that the pandemic had normalized. Before, a sales team would struggle a lot to make the argument in favor of AI. And there are many people that were wondering, is this AI or do I need any form of digital transformation? Maybe I need to have some form of intelligent automation, but AI was a bit of a far-fetched leap to reach. Today, I guess, with the idea that real-time information are so critical for businesses and for governments, I think we had really legitimized the use of AI. So the adoption in our specific case went actually literally through the roof. We have no capacity to deal with the type of work we are asked to do because we don't have enough data scientists.
Got it. So, and Greg, I'd love to get your thoughts on specific situations. I know in our meeting beforehand, you mentioned a couple of examples of where companies use data to add this value to their customers. And if there are specific situations where we can look at use cases of the companies who use this data, the benefit and what goes into it, that would be great. What are your thoughts on that?
Yeah, I think the interesting kind of aspects of the conversation to me are the kind of the predictive ways in which data is being used and machine learning is being used. I mean, today we've had the amazing news from DeepMind about the breakthrough in the predictive nature of protein folding, the work they've been doing there. And that data set has existed for a long time, and it's just been the application of DeepMind's deep learning algorithm that's enabled us to sort of like speed up this breakthrough in science, which could have enormous implications for all kinds of disease, whether that's Parkinson's or Alzheimer's. But in a more kind of like day-to-day sort of level, I think that we're looking at organizations being able to sort of like see the world in kind of entirely new ways. So I'll give you an example. Let's think about drones, let's think about satellites. So we're going to be able to start seeing geoeconomic trends in really interesting ways. So that could be anything from, I don't know, logging in the Amazon. We're hearing about, that the last year has been the worst year on record for destruction of the Amazon. We're able to see that because of satellite imagery. Let's look at something like shipping. So there's startups now that are able to sort of like look at shipping, the way that it's moving around commodities around the world. So we can make real, traders can work, who are working in the commodities field, can start making bets about oil moving around the world or grain or whatever it is. So what we're beginning to see is like our ability to really apply our understanding of data via machine learning in interesting ways. And the example that, there's so many examples, but legal services, a really interesting one. You look at the way that machine learning is being applied in that, particularly in natural language processing, in very, very complex, say, fraud trials, which are very expensive to get attorneys to go through a lot of documentation. It's quite slow. Machine learning can be applied to that. It can move forward, and that means the attorneys can spend their time actually building the case and actually connecting the dots, which is far more important for their time. And, we're seeing, obviously, lots of data sets coming out around COVID. One example was a CEO of a company I was talking to the other day, and he was telling me how he realized that a lot of he has a segment of customers who often are, financially distressed, right? So they're going to miss payments. However, he said there's a whole other segment they're beginning to see, and they're able to predict who these people are now, who maybe have never defaulted before, they've never missed a payment. And what they're using AI for now and data is to be able to sort of like reach out to those customers first and say, hey, we realize things are pretty tough at the moment. We're here. We want to help you. If you're having a tough time, let's talk. Let's figure out a way through this. So it's offering organizations a way of actually figuring out deeper relationships with their customers and actually being able to sort of like add more broadly to the Commonwealth, if you like, to society in general.
Now, Greg, that's definitely an example of the day-to-day usage of this. And I would love to pose this to you and the others. We may be entering something of an age of value-driven choices, if you will. What are your thoughts around investors of tomorrow and how more ethical data sets might influence their decision making? And Greg, I'll let you pick up and take it to the other members of the panel as well. You start.
Well, yeah, I mean, I think that data sets, as was said earlier, ESG, those kinds of data sets it's still very, very early days in that area, and I think that we will see those data sets obviously sort of increasing enormously. I think that we have to really think, and the ethics of it are going to be significant over the coming years. We look at GDPR and those kinds of privacy laws, if you like, and I think we're beginning to see sort of to some degree a divergence of view. So we've got more kind of market-driven sort of versions maybe of the internet and data and privacy, and we're seeing more kind of maybe kind of like more of a Brussels-based view, which is more around consumer protection and privacy. So it's going to be interesting to see how those different kind of views of how data should be used and how it should be applied and who should have access to what data, how that plays out over the coming years.
Thank you for that. Amanda.
Yeah, I do think it's fascinating. I think Greg's point is a really good one. And if for us, we deal with sort of all the way from, say, personal data, which you need to be very, very careful about how you use and where you employ it, all the way through to really having very large corpuses of transaction data. So we've got sort of a whole range of different types of data sets that we both own and manage on behalf of other companies. And I think they offer masses of opportunity, but equally over the coming years, people are going to have to become much more savvy about understanding how they employ data to both stay the right side of, the laws that will be forthcoming and continue to be come from Brussels, but also to be careful in terms of their own reputation. And I won't name names, but there are companies out there that aren't having the best moments right here and now because they're potentially abusing the way that they're using people's own personal data today. So I think thinking reputationally about the sort of business that you want to be with regards to data is also going to be really, really important for companies.
Great. Well, Amanda and Greg, thank you so much for joining us. We will let you move on to your next meetings of the day, but thank you so much for your time. And we'd like to welcome back Anthony here as well. And we'd like to welcome back Anthony as well thank you for joining us and staying with us, Anthony and Mark here. So would just like to get your views on that, Mark and Anthony, around the ethics piece and your thoughts. Mark said we may take a more principle values approach to how we look at privacy and ethics moving forward. What are your thoughts there?
So maybe if to chime in, Keesa, right, as I'm trying to tell you from the conversation with Amanda and Greg, the priority on ESG is becoming quite clear for the investors. Many of those investors are still very much concentrated on physical industries where you actually can really measure the compliance to ESG. If you're looking at environmental performance, if you're looking at CO2 emissions, if you're looking at labor practices, if you are in the physical world, let's call it the hardware world, it's relatively possible for you to reinforce a sense of measurement. But when you're shifting into the software world, where many of these are intangibles, measurement becomes a little bit more difficult to define in the first place. You could argue, shall I measure the company's performance? But many of the technology companies, they are constantly subsetting the technology operation to so many different companies as well. And it's a very horizontal, integrated to some extent process. So what we'll be looking after and reinforcing, we will try to be very industry specific, like it happened back in time for the pharmaceutical companies, like it can happen, for example, for the food companies. But how will we apply specific, industry-specific ethical standard to the technology companies when somehow a lot of their services are already distributed around the world? or will we try to reinforce it across every single element of the value chain? I think these are some of the challenges that are clearly ahead of us, which, going back to some of the conversation we're having prior to going live in the show, the governance and the regulation for technology will become critical in the next few years. Because if we get this right, we're going to be able to avoid innovation graveyards, making sure investors still going to inject capital where they have to. Startup and ecosystem will be thriving forces. And I think we'll see the positive side of technology and the technology ecosystems. If we won't, it goes back to some of the conversation we were having before, is who will extract more value? Will the value be extracted from consumer, from these technology companies where many of the services are for free, or will have extracting more information, more value out of us, because data today is, as you said at the very beginning, the new oil, the new currency, right? So I guess these are questions that all the time we'll be able to answer, but we are in a quite critical period of history where this conversation needs to happen right now.
And you're right, to that point, we are seeing that, particularly with the governance regulation around technology, a lot of discussion being had there. Want to get you in, Anthony, with a question from the audience here. How would you differentiate artificial intelligence and intelligent automation? And where and how would the crux rely on creating the best value proportions for the business models, irrespective of nature or size?
Okay. I think if we're referring to intelligent automation as the holistic transformation from your internal business process to something a little more machine learning based, I think Mark already made a pretty good point, which is that you have this lateral outsourcing of your complex tasks to someone else. This you have this intermingling of different companies in technology, but that also creates a level of complexity, that opaqueness that you can't really explain, because now, for instance, you could outsource your data usage, your machine learning and AI models to a company like Data Robot, but the cost in energy of training machine learning models is very high. So if you're not going to bear the burden of that cost, it seems like these other companies would be burdened by the cost of this data training, the energy costs, if ESG becomes to that extent imposed on people and restrictive. But it does create a level of transparency that I don't think people are ready for yet, because to some degree, when we're creating this ESG clarity, that if we there's a trade-off between the level of transparency between companies and their business process, and potentially the subsequent profitability of that company, because you're exposing a lot of your inner workings. And going back to the question between AI and what's the difference between AI and intelligent automation, I'd say AI is very much a more of an academic space, and intelligent automation is more of a holistic approach to transforming the inner workings of your business. That's what I would say. Yeah.
Great. And I would love to just move that forward and talk a bit about if you see holding data, especially personal data, as an asset. And I love how you just framed that, Anthony, about the trade-off between transparency and profitability, because you are exposing internal processes. So if we were to take that and just really clarify and define which box we put it in, or could we put it in both, what are our thoughts there?
Well, I guess in the holding data space, that's already being tackled to some extent through things like GDPR. But I would say there's not too much problem holding. I mean, I know we do get more and more websites attacked through exploitation techniques or social engineering every year. But this is something that I guess we can work on in an encryption sense, or just an education sense for people not to give up their passwords to fake websites. But holding data sets, I think people already do enough malevolent things with the data sets they have, never mind the bad people getting access to them. But any thoughts on that, Mark?
Sure. I think the model needs data to operate, and therefore the acquisition of data is inevitable, is intrinsic to how the system works. I guess the real question would be whether we'll be able to create the right frameworks of reference. And I'm referring digital identity today is not just a nice blend and fusion, right? It is really something we need to figure out, because a lot of our life is entirely in a digital format. Digital sovereignty will become an important conversation where countries will find themselves completely dependent on foreign private companies to determine, for example, their strategic asset, their cloud computing strategies. I think we have to redefine the world in light of the fact that data today is not just a secondary aspect, but it is becoming quite primary. So I think rather than sometimes just challenging whether the system needs or not data to work and whether the system creates liability or asset, which clearly comes with it. Every liability and every asset, right, is part of what, for example, industrial model has shown us in the past. I guess it's really about creating frameworks that will help us navigate this. And those frameworks, they start with things like GDPR, which I think it was a great pilot. The US might be ready to roll a second wave of GDPR, elaborated after the first one. More countries could possibly emulate this. I think we are ready to see more governance in the way that it will define the standards required. And I think it's important for me to say this, Keesa. Sometimes we think of governance as a way of restricting access. I think we should change it in thinking that governance is a way to creating standards. And it is standard that allows also small, medium enterprises to play a role. I mean, we really need to make sure that we are able to lift them up. Otherwise, we're going to have this large dependency with a handful of companies concentrated between the Valley and China, and the rest of the world unable to really cope with this enormous gap. But if we're making governance a reality, we're really standardizing access. And that means that millions of small, medium enterprises will be able to use the power of technology to really participate in the global economy. So we're bypassing lottery of birth. So I always see governance as an opportunity to help standardize, like we did it for money, where today we're respecting the nominal value of $1 sent from the US or of the UK by respecting that the value will not be changed in the transaction, right? It will be $1 in the US. It is $1 in the UK when converted, right? Like we do this, for example, for drugs and the pharmas, in which we make sure that the breakthrough coming from a clinical trial will be able to reach millions of people, right, through the distribution of a pharma company. They are standardized so that we can have more people taking part in this. So I see this as somehow the opportunity for us to reconcile this tension that somehow is not yet addressed.
Mark Anthony, such great information. I mean, we've looked at so many different aspects, started off talking about news media, how it's constantly expanding, and how we can see impacts to assets by simple YouTube comments or Facebook posts, and how these things can really have the ability to move in terms of certain assets and move and impact the markets. Also, we talked about natural language processing and the rise in people employing that. And I love really talking about the day-to-day and how we use data, how we use natural language processing and AI in our day-to-day, as well as in the larger functions of our work. Data is a strategic insight. And I love that you said, Mark, that data is strategic, and that every company is in some way in the business of tech because of our dependence on technology, our dependence on cloud storage. Also, we heard about the trends behind geoeconomic trends like shipping, moving commodities, how that's being used to inform commodities traders. So we're beginning to see more geoeconomic trends, and we're really beginning to use that in the trading space and in the market space. Also, the trade-off between the level of transparency and profitability. Anthony and Mark, some great conversation there. Businesses may be exposing internal processes and internal workings, and there's always a balance between what we're exposing versus what we're receiving, what our customers are receiving in terms of benefit. And then finally, digital identity. We really need to get this right globally, as today data is key. It drives the markets, and it even drives our day-to-day life on so many levels. I'd like to thank Mark, Anthony, as well as our other panelists, Greg and Amanda, for joining us.
Thanks for having us.
And as always, thank you so much to our audience. Could not do this without you. So thank you for your participation, your questions, and your presence. If you enjoyed today's episode and would like to learn more, You can download the Refinitiv and Wired magazine report in full by using the link or scanning the QR code on the screen now. Thank you so much for joining us. I'm Keesa Shreen. Be well.